Wonderful day, ladies and gentlemen. Mines and Money 2015, and I have a very prominent guest now here with me, Rick Rule from Sprott Asset Management. And yeah, we want to talk about mining for sure, how he survived this year and what's coming up. Rick, pleasure, and thanks for taking the time.
Pleasure's mine, thank you.
Before we get into the theme, how do you rate the show this year? It's a bit less,
This show has been very successful for us at Sprott. As you say, the show is slower, but the truth is that the ongoing bear market has made both investors and issuers more reasonable. So this show has been very profitable for us. I suspect perhaps because of my low expectations. My expectations have been greatly exceeded.
It's always good to have low expectations, and you're a good surprised. No, perfect. Great to hear that, and I think also it's a good quality bunch of people here, and I think those are the last survivors which are really here, and the last people who really have an interest in the sector. But anyway, you are with Sprott Asset Management. You are one of the big investors in the mining scene. How did you 2015? How survived the year?
2015 was a hard year, but not as hard as 2014. At Sprott, we began to realize the difficulty that the sector was in 2012, and you prepare and prepare and prepare, and finally you get it right. One of the things that saved us for the last 4 years, there's two things that have saved us really. One has been the advent of the U.S. exchange-traded products, the Sprott physical trusts and the ETFs. And the other has been the incredible success of our lending book. It's interesting to note that our return on capital employed in the lending business exceeds 15%.
Wow, that's a lot.
So the delta between our lending book and our equity products has been pretty extraordinary. The real bright spots for Sprott have been the lending book and, of course, the U.S. exchange-traded products, and they've been very, very good.
Great. So maybe some ideas. Lending book, this is one thing. You are financing the mines, of course. What ideas do you have for 2016 then for the mining business?
One of the things that I think that mining investors, in fact, extractive industry investors in general, have to look at, so many extractive industry investors are just upside oriented without paying attention to the downside. You know, the truth is that the bond market, in particular the junk bond market in resources, is absolutely imploding. As an example, right now, there are two, and I'm not going to name them, world-class mining companies where the senior debt, the revolving credit facilities owned by the biggest banks in the world, the Deutsche banks in the world, are trading at a discount. Now, those loans have to be paid back every penny as to principal and interest before the shareholders get any money at all. So one of the things that investors might want to look at is the increasing dislocation in the bond market and the fact that the bond market in certain resource issuers is beginning to show equity-like returns. If you think about the performance of the junior equities this year, and you think about the performance of the Sprott lending book, 15% plus, that gives you an idea of the opportunities available to investors, both retail and institutional, in bonds and other debt in the extractive industries. That's a good place to have part of your portfolio while you wait for some of the turmoil to subside.
Absolutely. Yeah, we hope that this changes quite soon. But what we are interested in is where do you see opportunities? Or let's put it also that way, what countries do you rate now as an interest? I mean, what could be exciting? I hear here at the show, I heard Argentina and Turkey could be interesting for the future. For example,
I think those are two good names. I think that in the very, very near terms, the expectations with regards to Argentina are probably over high. The politics takes place throughout the spectrum in Argentina, and it's a full contact sport there. I think at the federal level, it's improving, but business is done in Argentina at the state level, and work still needs to be done in provinces like Neuquén and Santa Cruz and Salta, where the mining industry is. Turkey is attractive to me. Turkey is beginning to be priced at a discount because of the turmoil in the region. For those of your readers and listeners who have been to Turkey, you understand the strength of the Turkish army. The idea that some of those regional players are going to cause trouble in Turkey is dispelled by the Turks' willingness to shoot down a Russian jet, never mind ISIS. We like the prospectivity of Turkey. We like the political regime as we have experienced in Turkey. We love the food, of course.
Absolutely.
The truth is, in extractive industries, and you know this after all your years in the business, you have to be a contrarian or you will be a victim. The truth is that countries that have no further to fall usually rise, and countries that don't have to rise usually fall. The truth is that the rich countries become progressively riskier, while eventually the poor countries become less risky. So names that we're looking at would include Russia as an example, something that everybody loves to hate, simply because the resources are great. The country has made improvements, people don't understand that, and it's really cheap. Is this for most investors? No. Is it perhaps for German investors who have a longer history with Russia? Yes.
Yes, absolutely. Before we come maybe to uranium also, because I will always remember your famous speech in Vancouver, it's good 2 years ago, I would say, almost maybe 3 years ago even, at the fission uranium reception, and it was so perfect about uranium. I think you were totally right. Maybe the market has not following it completely, but you were totally right. Before we jump into that, I want to ask you a total different question. Janet Yellen, in 2 weeks. Rate rises? Probably yes. Do you think this is totally overrated in the psychology of the investors? Or do you think we need now the rate rise to get a bit more security, that this, let's say, I would call it like silly riding stops? Yeah? Because I think if we have 0% or 0.25%, it does not really change a lot. What's your opinion on that?
Well, I think we need to raise the interest rate. And I think
absolutely.
she will raise the interest rate. I think we need to raise the interest rate for honesty purposes. The truth is that for many years, people did the right thing. They invested and they saved for their retirement. And now we propose to pay them no interest. We're stealing from the savers to give money to the spenders. This isn't part of the German social tradition, nor is it part of the American social tradition. So the idea that we have artificially low interest rates really means that what we're doing is we're stealing from responsible people and giving to irresponsible people, which is not something we should do. Now, with regards to ourselves as investors, getting away from the moralistic point of view, I think that the next interest rate rise is baked into the cake. A 1/4 point rise I don't think is going to make any difference because they've so successfully signaled it. If she can put another interest rate rise in place, and if she can make it stick, that would be very bullish for the US dollar and not particularly bullish for commodities. The question is, can she make it stick? The strong parts in the US economy have to do with things like new car sales, which are very interest rate sensitive, and new home sales, which are very interest rate sensitive. If you increase the 30-year mortgage rate in the United States by 50 basis points in cost and then some margin, in other words, if you increase the 30-year mortgage rate by 75 basis points, you make homes in the US less affordable. And whether or not the US economy as it sits today can stand that easily is a very, very different question. One that's well above my pay grade.
Okay, good. Thank you for that. Last question, as I just mentioned it, uranium. What's your view on that now? Still bullish?
I am bullish, but to quote an old American country singer, I was so wrong, you know. The truth is, what I didn't anticipate when we talked before was the worldwide lack of demand for anything. The power consumption rates in Japan, as an example, have been fairly constrained. When I looked before, seaborne liquefied natural gas prices were $15 a thousand, or $15 per million BTU if you want. As a consequence of worldwide lack of demand, that number is down around $7. So the immediate impetus for the Japanese to restart the nuclear fleet has declined. Similarly, in your country, in Germany, the slowdown in nuclear has been met a variety of ways. One, of course, has been ironically to import nuclear power from Poland and France.
Yeah, France especially.
And also, of course, to import coal from us, for which we thank you. But the truth is that even as rich as Germany is, the policies that your country has engaged in wouldn't have been successful had it not been for very constrained demand for electricity. Now, the truth is, the uranium price has to go up. The recent Cameco study proved that the industry average cost of uranium, including earning the cost of capital, which one must do, is about $65 US a pound. So the arithmetic goes like this. You make it for $65, you sell it for $35, you lose $30 a pound and try and make it up on volume. How long can that last?
Not long, that's for sure. Rick, thank you very much for that, very interesting. And yeah, wish you Merry Christmas. all the best for 2016, and the most important thing, stay healthy.
Thank you, and thank you to your listeners and readers.
Thank you. Ladies and gentlemen, that was Rick Rule from Sprott Asset Management. Well, you heard it. We are still in trouble in the markets, of course, but Turkey, Argentina, Russia should be of interest, especially also for us Germans. And uranium is something which should be definitely on the watch list. And we're going to see what's going on there. Merry Christmas from London. Bye-bye.